The Fed lowered the Fed funds rate, and guess what? This time interest rates came down. That's right. It hasn't really been like that for much of the last year and a half, but this time it was what the Fed chair said after the Fed fund rate decision that really helped move the needle. And guess what? There could be more rate drops coming. We'll get into that and more on this week's Housing Market Update. So what do we got coming up this week? Well, the big three, you know what they are. Prices in Oahu are down. We'll talk about that. Inventory's down too, and rates. All right, they're all down arrows, but the rate arrow is a green one, and that is certainly a very good one as we go into the Christmas season. Let's talk about headline news. Yes, the Fed cut rates. We're going to break that down for you. The Honolulu housing market slows down a lot. We got the HBR, the Honolulu Board of Realtors market report for November, and it shows a slowing market. Really, the brakes got put on the market. Not a big surprise though. VA loans increase in volume, led by refinances. I'm going to give you a little bit of caution on that. We'll talk about that. And then VA rates stay below 6%. And like I said, they could go lower. So the November housing market report, basically status of single family home and condo sales report came out last week. And what it showed is a slowing market. And that is normally what we see in November, but it is a big drop off after the surge that we saw through October with an increase in home sales. We saw median sales price come down. We'll kind of get down the month to month. I don't really look so much at the year to year, but the month to month just to see kind of what the trajectory is. But you can see we had a drop in single family home sales by 7.7%. We had a drop of 28.7% in condo sales. That's a big drop, people. And the prices dropped too. The price drop on condos from $535,000 to $487,000. That's a big drop, folks. And then single family homes dropped by 5.4% from 1.162 to 1.1 million. Still above 1.1 million, but still a drop just the same. And I think really it's just a tired market. And you know what? People are kind of starting to concentrate on some other things. But let's take a look at some of the other items that we can look at month over month. Homes staying on the market longer for single family homes. Not a lot, but just a little bit. And down nearly 10% for condos, days on market from 44 down to 40. So that's a big drop there. You had a huge drop in new listings, a slight drop in inventory. We'll break that down. And months of supply, actually typical for this time of the year, down just a bit. All right, new listings. We had 7th month in a row where we had declines in listings, and the 4th time in a row where we had a listings below 1,000. So again, this is pretty normal numbers. You see a decrease as we get into the winter months, but I always laugh when I say winter in Oahu, but it is what it is. It slows down on the winter here too. It was cold today. It was like in the low 70s, and there wasn't much sunshine. I almost felt like I was in Seattle or something. This is normal though. This listings right now is normal every time of the year. But we did see a big drop from 950 to 798 new listings last month. That's overall, that's combined single family homes and for condos. Let's take a look at active inventory. Again, active inventory down just a bit. We're still near 10-year highs in inventory. And for the 9th month in a row, we have over 3,000 active units for sale on the market at 3,008. That's a big number, folks. That's a huge number. So what does this mean? That we got so much inventory right now, the market's typically slowing down for buyers. This is a great season for buyers on Oahu because we have so much inventory. You have a lot to choose from. It's not one size fits all. It's, hey, there's a lot of sizes. You find the one that fits the best. And guess what? You're going to get seller credits and you're going to get lower rates, lower money out of pocket right now. This is a time for many buyers, if you're ready, to strike and get a great deal on a home. As we look at closed sales, we have 557 closed sales this month, a big drop from the 704 that we saw last month and the 600s that we were seeing the month before. It's still pretty elevated, not too bad. But you know, what is this kind of showing? It's maybe showing a little bit of exhaustion for some buyers. Again, a lot of people just taking some time, going to the sidelines and not participating, waiting for rates to come down. But I tell you what, those people are going to miss out, I think, if they wait much longer. Single family home sales, guess where they were strongest? No surprise, 800 to 900,000, rising from 14 to 33 listings year over year. And then the other big increase was lower priced condos. Condos below 400,000 saw a 28% increase in closed sales, while condos above 500,000 dropped 22% year over year. So kind of mixed bag on the closed sales. Still a good amount of homes sold. You can't say the market's dead. 557 people will say otherwise, but a slight slow down. And let's look at the median sales price. Again, we are in that range where the elevator ain't going down. All right, I guess we're at 1.1 million for single-family homes, just under 500,000 for condos. Again, I think part of that is just time of the year. Home prices aren't going down, folks. As a matter of fact, if interest rates go down any farther, you're gonna see prices go up. You may not see it until the springtime, but you're gonna start seeing those prices start to recover, especially if we get interest rates on VA down into the mid-5s. And let me tell you, we're heading in that direction right now. Let's talk about rates, baby. All right, let's talk about the Fed. The Fed cut rates this week, 25 basis points, no surprise. So we're right between 3.5 and 3.75%. Again, Fed funds rate, short-term rates, not 30-year mortgage rates, but there is a relationship. And what was really interesting, and the reason why interest rates kind of started to come down, is really what Fed Chair Powell said after the decision was made. Talking about labor, they admitted they've overstated employment by about 60,000. So they know that labor is not as good as the numbers have stated over the course of the last year, admitted that the labor market is not solid. And what this might be, though, is insights into next week. Maybe they saw some numbers that we haven't seen yet, and you know what this could be. And again, it's a guess, but we could see lower numbers in the BLS jobs report that comes out next week. That's what that was telling me. Inflation, if it wasn't for tariffs, would be closer to the 2% number that the Fed wants. That's what Fed Chair Powell said. And you look at core inflation, which strips out the food and energy prices, we actually did see a decrease last month from 2.9 to 2.8%. So really moving in the right direction. Not at 2%, but you know what? 2%, quite frankly, is an arbitrary number. As long as we got inflation steady, coming down, I think we're doing well. And that's, I think, what the Fed is kind of seeing right now. Here's the other big thing, and we'll find this out on Friday, December 12th. What is the impact going to be as the Fed has just stated that they are going to start buying $40 billion per month in treasury bills starting this Friday? So that could help mortgage rates come down as well. So basically the Fed is putting more money into the market. So that's great. Personally, I think the Fed is also saying that we're near a neutral rate, but probably not. I think we need to come down. And President Trump was immediately saying yesterday, hey, you should have dropped 50 basis points. Yeah, maybe, but you know what? I'll take steady Eddie over, just this wild up and down. So that's kind of what we saw. And then you got to look at the makeup of the Fed and how they voted. Typically, they're in lockstep, but this time we had 3 dissenters. You had Goolsbee and Schmidt, who dissented. They didn't want to cut. And then you had President Trump's newest appointee, Moran, who actually wanted a 50 basis point cut. And which is no surprise. He's been pushing for a 50 basis cut on at least the last 2 since he's been on the board. So really good news from the Fed. Could be basically portend or forecasting what we're going to see in the next couple of weeks with interest rates coming down. They were not committal on interest rate drops next year. They're basically saying, hey, we're going to cut once in 26 and once in 27, and then we'll stop in 28. So that's okay, because they said at the beginning of this year they were probably going to cut 4 or 5 times this year. So really, they're going to rely on the numbers. Numbers don't lie. Well, they kind of do. But they're going to rely on the numbers to make their decisions moving forward. So really good news from the Fed. Let's get on to the rest. Veterans. Getting a VA rate in the 4s sounds amazing until you see what it costs. Rates are falling, and I'm seeing vets refinance just because the numbers look good without running the math. Before any VA IRRRL, ask 3 things. What's the goal? Lower payment or faster payoff? What's the cost? And how long until I break even? And 3, how long am I going to own my home? Real example. A veteran was offered a 4.75 rate, but it required 2 points. Sounds great until we ran the numbers. Those points would have cost him $25,000 of equity on points and funding fee alone. We passed and saved him the money. With a VA IRRRL, the win isn't the lowest rate on paper. It's the lowest total cost and real monthly relief. If you're a veteran thinking about a VA IRRRL, comment Earl or DM me. I'll run the math and I'll tell you yes or no. So let's talk about VA rates now. We'll close this up with VA rates and what we're going to see in the future. VA rates, right, as we end the week, we're about 5.9%. Wednesday, Thursday, we saw interest rates come down. Not a lot, but a little bit, which is better than going up. All right, so we are right now near our 2025 lows for mortgage rates. Inventory, hey, you look at that chart, inventory is dropping like it's hot. Still, we're above 3,000 active inventory, but just above 3,000. So the numbers are still coming down. You look at that chart, that big red circle. What does that show you? Since interest rates started coming down in July, inventory started to drop from 3,500 now to just over 3,000. If rates go down more, you're going to start seeing those numbers come down. Personally, again, I don't want them to go down that fast. I just want them to go down. I just want to keep building momentum in the market. If rates continue to drop, here's a few things that will happen. Inventory will follow. More sellers will start putting their homes on the market because they're not going to feel handcuffed about selling a home at 2.5% and then trying to buy a home at 6% or 6.5%. And by spring, I would expect that the seller credits will start to dry up. They'll be more competitive. And by summer, if prices continue to go up and more buyers come in the market, guess what? Sellers paying closing costs for the buyer's agent, probably going to stop happening. So rates could be lower in the summer next year, but you might be paying more for that home. Not only in the purchase price, but in the out-of-pocket expenses. Right now, you can buy a home, no money out of pocket, and get a pretty dang low rate. If rates go up in the sixes, say something happens, and anything can happen, the market is volatile, hey, seller credits are going to remain the norm. And as long as rates are elevated, seller credits will remain the norm across most of this island, and you will see sellers paying closing costs, sellers helping to buy down rates. Bad thing if rates start to go up again. Short sales and foreclosures. A lot of people are holding on. I just talked to a homeowner today, and if I can't refinance them, they may lose their home. They're upside down on their home that they bought at the beginning of the year. Things happen, people change. So we're going to help this person out, but there are a lot of people who are in that boat. They can't sell the home because they're underwater. They bought a couple years ago and they're trying to sell. They thought they could do a quick turn. Doesn't always work, and that's very risky. Short-term home ownership is very risky. If interest rates stay elevated, expect to see home prices continue to come down like we saw in the November report. What can we expect next week? Well, I tell you what, we got inflation report coming out, the CPI, the Consumer Price Index, and we got the BLS jobs report. Those numbers, I think, are going to be a little skewed because we don't have a full month's detailed knowledge of the numbers, but still, it's going to give us an indication of what we can expect moving forward. So next week, it's going to be exciting. A lot of news coming out. I do think there's an opportunity for interest rates to continue to go down. That's all I got for you this week. Have a great week. Aloha.